get to some of the three hot stocks that Congress members are buying right now. Thomas, your first one, really no surprise.
Really, it's not a surprise. It is the hottest stock in the market today, Nvidia. But in regards to Congress, 5 members have made 7 purchases in the last 90 days. That includes Nancy Pelosi. We have members of both sides of the aisle, so it's bipartisan buying. In addition to the congressional buying, there's also a tremendous amount of market support. So this is more than just a congressional play. Nvidia is the most followed stock, a most upgraded stock. It's got top rated stock on Market Beat website. So there are many factors going into the Nvidia trade.
Yeah, I think one of the things that's interesting to me about Nvidia being one of the most traded stocks by Congress, especially it's being heavily bought, is the idea that you're starting to see the US Congress now actively look at AI. They understand that this is not something that's a bubble, it's not something that's going away. And now they're looking to find out how Congress should or might be able to regulate it. That's why I think it's really interesting that now you're starting to, that's coinciding with activity in NVIDIA.
Well, right. And speaking to our conspiracy theory before, coincidentally,
Yeah,
Nvidia is now up to potentially sell its chips to Saudi Arabia. And who would have that knowledge first but the members of Congress?
correct.
That's a very interesting point. Anything about NVIDIA being down, the volatility the stock has seen in the last month or so? Are members of Congress still all in on this stock despite the recent volatility?
Yeah, I haven't seen any selling, and there have been some recent purchases. So, like the most recent purchases were made after the stock dipped. I think that the members of Congress are, and generally speaking, are buying Nvidia in alignment with the uptrend.
After failing to hit new highs in the last several months, Nvidia's extremely bullish trend from the first half of the year has stalled. Even though Nvidia delivered solid results, the company witnessed a drop following the highly anticipated Q2 earnings report at the end of August due to inflated investor expectations for hypergrowth. This price drop, in my opinion, presents a strong opportunity. I will discuss 5 factors: strong revenue growth despite challenging competition, AI superiority, valuation, technical indications, and Wall Street analyst consensus that support my optimistic outlook for Nvidia. The main justification for my optimism about Nvidia: robust revenue growth for Nvidia in spite of challenging comparisons. First, despite difficult comparisons, Nvidia's Q2 results showed strong revenue growth, which lends credence to a protracted optimistic narrative. With revenues of $30 billion in the last quarter, Nvidia reported year-over-year growth of 122%, which is impressive considering the company's already sizable revenue base. Even while this quarter's growth rate is less than the prior quarter's 200% jump, the absolute triple-digit top-line increase is nonetheless amazing. This demonstrates Nvidia's capacity to grow its revenue even in comparison to its historical performance. Although excessively optimistic expectations may have contributed to the post-Q2 stock decline, it's important to remember that Nvidia is still generating consecutive quarterly revenue growth, which indicates strong demand for its products, particularly in AI and data centers. This degree of large-scale, consistent growth demonstrates Nvidia's ability to take market share and propel long-term revenue development. The company's confidence in continuing its growth trajectory is further demonstrated by Nvidia's $32.5 billion revenue projection for the third quarter. Second reason: Nvidia's market domination in AI and data centers. The second encouraging factor is Nvidia's persistent leadership in the data center GPU market, where, according to HPC Wire, it has a 98% market share in this quickly expanding industry. Industry demand for AI-driven solutions is rising, and NVIDIA's H100 Hopper GPU is becoming essential for enterprise cloud apps that need a lot of processing power. Beyond hardware, NVIDIA dominates AI with its suite of software products, such as QDN and CUDA, which provide a complete AI solution. As stated on NVIDIA's earnings call, the business wants to use sophisticated data processing libraries to transition from traditional to accelerated computing in order to completely alter the $1 trillion data center market. In the future, NVIDIA intends to release its Blackwell architecture, which will be more powerful and efficient than Hopper, in Q4 of fiscal 2025. including chips, systems, networking, and software. Blackwell will offer complete solutions to satisfy the needs of AI developers and hyperscalers. This release is a major impetus for strengthening NVIDIA's position as the industry leader in AI. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel, as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Right now is that as far as kind of the mega cap tech companies out there is concerned, they will continue to spend as long as kind of their business models, their revenue trajectory continues to hold up. And we think that will be the case in terms of cloud spend and in terms of digital ad spend going into 2025. And also kind of the compute trajectory here over the next decade, right? If you're a believer that kind of what Jensen has recently said here, and that is the fact that the compute can kind of increase by up to 1 million-fold here over the next decade. The fact that improving compute metrics over the next couple of years will potentially drive greater AI monetization, new use cases for AI, I think is a very interesting proposition and a reason why these hyperscalers will need to continue to aggressively invest. So for that reason, we continue to think there is stabilization past 2025. And that really is the key, I think, right now for investors. If they have greater conviction on 2026, I think you'll see kind of improved dynamics for the broader semiconductor industry. And the names we do like the most continue to be some of the names that worked here over the last kind of 12 to 18 months. Nvidia.
Third reason. NVIDIA seems reasonably priced when growth is taken into account. The third thing to talk about is NVIDIA's stock prices. Its 54.7x P/E ratio and 42.5x forward P/E may appear high at first, particularly when contrasted with the semiconductor sector average of 23.7x. Nonetheless, NVIDIA's growth prospects, which are predicted to see the business expand by 106% in revenue and 119% in EPS this year, support my positive position. In addition, analysts project that over the next 3 to 5 years, NVIDIA's EPS will increase at a CAGR of 36.6%. This remarkable growth rate yields a respectable forward price-to-earnings to growth (PEG) ratio of 1.16 when paired with the current ahead P/E. PEG ratios below 1 are typically associated with inexpensive companies. However, NVIDIA's PEG ratio is higher than that of any other Magnificent 7 stock. The next lowest PEG ratios in this group are 1.28 for Alphabet and 1.48 for Meta. Although this does not imply that NVIDIA is cheap in relation to its big tech competitors, it does imply that the stock does not seem unduly pricey based on this measure. Reason no. 4. The moving averages of the NVIDIA point to a bullish trend. The sentiment surrounding the success of NVIDIA's stock is strongly related to the fourth arguments supporting the optimistic thesis. The company is still in a hypergrowth era based on its triple-digit sales growth, even with recent volatility. Nonetheless, worries about a possible bubble persist, given the astounding 2,700% increase in stock prices over the previous 5 years. I think the key to determining momentum in this situation is to pay close attention to long-term moving averages. Considering the stock's 48% annualized volatility, this offers a better picture of NVIDIA's trajectory within daily volatility. The fact that the price of NVIDIA stock is currently above its 200-day moving average of $92.80 supports the rising trend of the stock. Reason number 5. Wall Street remains overwhelmingly bullish on NVIDIA. And last, the overwhelming agreement among Wall Street analysts to be bullish about NVIDIA is the sixth factor supporting my positive forecast for the company. 3 analysts have advised keeping the stock, while 39 of the 42 who have covered it have suggested purchasing it. Furthermore, these analysts' average price targets are $152.44, suggesting a potential gain of almost 25%. Hans Mosman, an analyst at Rosenblatt, is particularly noteworthy. He has the highest Wall Street price target for NVIDIA, $200 per share. After the Q2 results, which he considered strong because to the increase in networking and Hopper AI, he remained optimistic. Mosesman maintains his confidence despite a minor decline in gross margins caused by modifications on Blackwell chips intended to increase yields. He emphasizes that a 44x P/E multiple based on fiscal 2027 EPS supports the bullish sentiment, even in the event of any short-term share price downturn. I've covered 5 main arguments in this video to back up my buy recommendation for Nvidia. I think that investors hoping to take advantage of the stock's high growth trajectory will find an appealing purchasing opportunity given its recent dip. Nvidia's Q2 statistics indicate that despite potential short-term bumps, the company's growth narrative is expected to continue well as it solidifies its market dominance and gets ready for the imminent release of the Blackwell architecture. Wall Street concurs that the current rich value might be justified given the possibility for additional development in the upcoming years. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoy them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Blackwell was purpose-built from the ground up to really make sure it could deliver the most performance and efficiency. And so when I say from the ground up, of course we started with an incredible processor, and that's the Blackwell processor. We also coupled that with our Grace CPU, and that's actually 2 times more energy efficient than the standard x86 CPU. And then, of course, we also looked at how do they communicate to each other. So we have a proprietary communication protocol called NVLink, which allows GPUs to connect to each other at very high speeds, and that eliminates a lot of the bottlenecks and therefore drives more efficiency. So when you look at the full system, 72 Grace Blackwell chips, processors connected over this NVLink fabric, it provides incredible performance that's actually 25 times more energy efficient than our previous gen, which is a Hopper-based system. So when you think about where the state of the art is today, most of the models are trained on Hopper and sort of our cutting edge platform that's available today. Blackwell is going to truly advance the state of the art in terms of performance and efficiency by over 25x.
So you have that efficiency when it comes to the technology, but talk to us about the demand for electricity side, for energy. I mean, these are more efficient. However, because they're more efficient, you're going to be using it so much more. So you still will need a lot more energy to run.
So there's kind of 2 different views of that. So when you think about the discussion of energy, it really becomes a short-term versus long-term. In the short term, most of our customers, you can't just go and build out a data center tomorrow or even in the next year time frame. So most of them are really trying to get the most out of their existing power envelopes. So Blackwell is going to be a huge uplift in terms of the productivity they can get out of their existing power assets. In terms of the long term, I think that's really where we're working very closely with grids, with data center build-outs, with other partners and providers to make sure that the data center as a whole is as efficient as possible, so that as you begin to ramp and build out these next-gen data centers, the grid's prepared as well as the infrastructure's prepared.
Over the last few years, Nvidia's stock has surged due to its domination in the artificial intelligence AI chip market, where it currently maintains a market share of over 80%. However, the stock has recently lost some of its traction, dropping more than 6% in the last month. A slowdown in AI spending could harm the corporation, according to some investors, while others are concerned about the increased competition in the chip market. These worries, in my opinion, are exaggerated, and Nvidia still has a long way to go before its stock starts to rise. According to my prediction, Nvidia's stock will skyrocket in the 4th quarter due to one specific factor, and the recent lack of momentum is only transitory. Let's begin this tech tale, which still has many fascinating chapters to come. The gaming business was this tech giant's primary source of income just a few years ago. The action was driven by Nvidia's graphics processing units, GPUs, which could manage several jobs at once. It was quickly discovered that this profile was ideal for various applications, such as artificial intelligence. When Nvidia focused on this rapidly expanding industry, its profits skyrocketed, consistently rising in the triple digits. These days, 87% of Nvidia's entire quarterly income comes from its data center division, which services AI clients. Given the enormous demand Nvidia is seeing and the general growth projections for the AI business, which are anticipated to rise from $200 billion to more than $1 trillion by 2030, that is projected to continue. While there are competitors, Nvidia leads the way in terms of innovation. It also intends to upgrade its GPUs annually, which should help it maintain its top ranking. Regarding spending on AI, my colleague Trevor Genuine recently wrote about how it might pick up steam in the upcoming years, which is fantastic news for Nvidia. Let's now discuss my prediction. Indeed, Nvidia's stock has performed poorly in recent weeks, but it's crucial to keep things in perspective. The stock has risen 2,700% over the last 5 years and has still gained 144% so far this year. I believe that this is a lull in the action, and that Nvidia's new Blackwell architecture sales will propel the stock upward in the upcoming fourth quarter. During its most recent earnings call, Nvidia stated that it will be increasing Blackwell manufacturing in the fourth quarter and expecting to generate several $billion in revenue from it.